Good morning, Bitcoiners. Welcome to Bitcoin for Mere Mortals, the channel where we're going to talk about Bitcoin, cryptocurrencies, technology, and the future. Bitcoin for Mere Mortals is also a book. It's available at Amazon, but I'm also going to give away a few books if you follow me on Twitter and retweet this video. So please do that, and also remember to subscribe to the channel, comment, share, and press the notification bell. Let's have a look at the markets today. It's almost about to enter 42,000. Come on. It's about there. Well, the market is still flat, as you can see, but at least it's not dropping. It's not dipping any longer. I think today might be a good day because everything is painted in green, and maybe this afternoon everything is gonna go up a little bit higher. I really think we have touched bottom, and from now on we're gonna go up. At the moment everything is kind of flat. Nothing is going up too much. Maybe just to mention a few, Polkadot is going up 3.8%, Avalanche is 5%, Polygon is almost 6%, Chainlink 4.6%, and a few others. Near Protocol is 8% now, and Phantom is 5.8%. Okay, so this is what we got. Fear index, we're exactly the same as yesterday, 23. Still extreme fear, but a little bit less than 2 days ago. Okay, this is a tweet from Dan Tapiero, and according to him, this is the most bullish macro backdrop in 75 years. Why is that? Because the Fed funds rate, which is here, for the last 75 years, is, well, it was 2.5, then it went to 4.9, 8.9, and now it's almost zero. The funds rate, which is more or less the interest for when banks borrow money from each other, that's the interest that they had to pay, and now it's almost zero. But that's the effective interest rate. But then you have to discount CPI from there, the inflation. You have to discount inflation from there. So and then you have the real rate. And this real rate in a healthy economy should be positive, and from that rate, that's the maximum you can expect for your money. If you have cash in the bank, in 1956, they might give you about 2% interest. Then it went up. The nominal rate they give you more. This is the nominal rate that they give you. This is what they use to entice customers. Oh, I'm going to give you 9% rate. And say, oh, that's great. But if the inflation is 6%, they're only giving you 2.8. So this is the rate you should look into when you are depositing money, cash in the bank, cash or cash equivalent like bonds. Well, for 75 years, it's been more or less positive, but now it's minus 6.72. What's that? It means that you'll be losing 6%, almost 7% every year for your money in the bank. What does this mean? Well, the people, investors, big and small, are not going to put money in the bank and going to look for a safe haven. And according to Dan Tapiero, the only safe havens right now are stocks, the stock market, Bitcoin, and Ethereum. So there you go. This is a very bullish indicator for Bitcoin. Then another one, Plan B, is trying to draw some parallels between the bull markets of 2012, 2016, and now in red, 2021. And if we follow previous patterns, and well, I don't see why not, we could be reaching 150,000 per Bitcoin in the near future. let's say before June this year. Then it will go down to 80,000. Then it will go up for in 2024 up to 400,000, and then will drop a little bit to 200,000 again. So this is what to be expected, and I think he probably will be right. He might get wrong the timing, but the market is clear pointing to these levels. So this is bullish as well. And this is another indicator, which is a real strength index. So every time we have this index here, or the relative strength, when the relative strength of Bitcoin is high, that's normally is a bearish indicator. So the price either stays low or goes down. But when it's low, when the RSI is low, normally the price rallies up. So the lowest it's been for the last 2 years is here, and now here. So a rebound is expected. If Bitcoin price do this, that's the same as in 2020 or 2021, we should have a rebound here and go to higher levels, to go to an all-time high or even higher. What else? PayPal is gonna launch a stablecoin. Stablecoins is like a bridge between fiat money and cryptocurrencies, and they will have to choose which platform, which blockchain they're gonna use. Could be Ethereum, could be Solana, could be Luna, could be Binance. But this is good. This in general, it means that more money is coming into the crypto world, and eventually the money ends up in Ethereum, in Bitcoin, or in any other crypto. So this is bullish as well. And this is in response to Stephen Hank, the Johns Hopkins economist. This is what an inactive volcano does. When you pierce the floor, there's lots of energy, lots of steam at high temperature and high pressure, and you can use that to mine, to move turbines and get electricity, and then with that you mine Bitcoin. So yeah, the economist was wrong again. And now I'm gonna tell you about Celsius. Celsius is a platform I use and I recommend. I don't get any money from there, any commissions. It's just that I like it. If you have some money, now, especially now that it seems to be the market seems to be a little bit stable, you could transfer the money from the exchange to Celsius. Very easy to do, very fast, and and you get, if you got stable coins, they will pay you 10.7% interest. If you are a platinum and you get your money in Cell reward, Cell is their own coin. And if you prefer, if you're not platinum yet, they give you 8.5%. So that's quite generous. So at least you'll be covering yourself from inflation. If you got your money in fiat and you don't want to go into crypto, transfer your money to Celsius. Keep it in TUSD dollars or any other USDC. For example, USDC, I like it. USDC is the stable coin from Coinbase, so it's very safe. And they give you 8.5%. That's a lot. It's very good. And I reckon Celsius is a very good, very safe platform. It's one of the biggest. It's got more than 1 million customers, and that's it's not gonna go down. I don't think it's gonna be hacked. It's comparable to Coinbase, Binance, and Kraken, and all the others. So if you have cryptocurrency, like you should, they can give you a lot more money even. If you got synthetic, they give you 70.8% or 14%, depending on which, if you're platinum or not. If you got Polygon, they give you 11, Polkadot 11, Binance coin 8.4, and Celsius, the own coin, their own platform coins, it's called Cell, they give you 5.10%. This is not even staking. This is you have the money there, and just for having the money there, they are paying this interest. The moment you send your Polkadot, you might have your Polkadot now in I don't know, in Binance, and you have it there, and it's not producing anything. You send it here, and from day one, it's producing 9.02%. So this is quite interesting. Why not do it? Why not do it? I mean, I don't recommend to buy the highest, for example. Some people might buy synthetic just because they get 17%. Well, that's probably not a good idea. It works more or less the other way around. Like if you have a currency because you believe in the project, you have studied the fundamentals. For example, I have Matic, I like Polkadot, I like Binance, I like Cell, and I like Luna. If you have any of this, why not transfer here and get 11 or 9% interest? Why not? For example, I don't like synthetic, so I'm not gonna buy synthetic just to get 17%, because I don't believe in the project. I might be wrong. But not only they pay you good interest in Celsius, they also, if you need liquidity, you can borrow at 1% APR. What does it mean? Let's see a straight example here. Let's say that you have one Bitcoin. You use that Bitcoin as a collateral, you leave it there as a guarantee that you're going to return the loan, and then you borrow 25% of that loan to value. So they will give you around, because Bitcoin is around 42,000 now, they will give you a little bit more than 10,000. They will give you $10,500 right now. If you want more loan to value, the interest goes up. So this is probably not worth it. I wouldn't recommend it. If you need a loan, it's better to get the loan at 1%. Also, when the loan to value is, for example, 50%, it means that if the price of Bitcoin goes down by 50%, you can get liquidated. So this is something to take into account. When your loan to value is only 25%, for you to be liquidated, the price will have to drop 75%. That's quite unlikely for Bitcoin, especially at these prices. Is Bitcoin now going to 10,000 per coin? I wish, because I buy more, but I don't think it's gonna happen. I don't think it's gonna happen ever. No. So there you go. You can borrow money. Let's say you need to buy a car, and you got one Bitcoin. You ask for the money. You choose how many years you want to give the money back. Probably the best is 3 years, the maximum. Why not? And you only will be paying $8.77 every month. That's it. For $8 every month, you can have $10,500 right now in your pocket. So this is quite good, because this is an American loan. The American loans, you pay interest only until the end of the loan, and then you pay the rest. You pay the capital. You have to give back the capital, obviously. So the total interest that you will pay for 3 years is $315, and then you have to give back the capital. But in 3 years, Bitcoin most likely would be 150,000. What does this mean? That you can take another loan at 1%, pay back this loan of 10,000, and still keep something like how much would you? 25%, like 30,000. Yeah, you will keep another 20 after you pay this loan with the next loan in 3 years. Then you will have 20,000 extra in cash to return in another 3 years. I don't know if if you know what I mean, but you could basically live off your Bitcoin forever if you do this, and if the markets don't drop 75%, which is very unlikely. So I think this is a really good option for people that don't want to sell the Bitcoin. Let's say that you have 1 Bitcoin, you don't have any cash, and you need to buy a car. Well, don't sell your Bitcoin, because Bitcoin is going to 1 million eventually, and then your car is going to the trash after a few years. But your Bitcoin is going to the moon. So better to use your Bitcoin as a collateral and borrow money against it. And Celsius is really the best place to do so, if you do it with these conditions: 1%, 25 loan to value, and also if you have some extra collateral somewhere else, that's also another guarantee. Say, if you have another half Bitcoin in another exchange, you can use that, because before they liquidate you, they will give you a liquidation call, and they will ask you for more. Even in the rare event of Bitcoin dropping to 10,000 or by 75%, they will say, if you put more money now, we don't liquidate you. So that'll be another option. So there you go. This is all I got for today, and just remember that holding Bitcoin is better than trading. You see, this is the race between the hare and the tortoise. The holder is going slowly, and the trader is buying and selling, but the holder in the end wins. So don't be greedy, don't try to be clever than the markets. Only 1% of traders make money. 100% of holders make money, so if you wait for long enough. So this is all I got for today. Remember to subscribe, comment, press the notification bell, and also if you can retweet this, follow me on Twitter and retweet this video, I'm gonna give you away a few books that you can read. So there you go. I will see you tomorrow at the same time. Thank you for watching.